Today is Tuesday, April 16th, and this is another update on my progress beating the S&P 500 along with the Ark Innovation ETF. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button and let's get into it. This is the only position change that I made at all since Monday. I had put 13% of my entire portfolio in a PSQ, which is the inverse of the NASDAQ. I closed out of that position this morning with a 1.21% gain. It wasn't the biggest gain, but it helped offset some of my losses yesterday, so overall I can't complain. These are all my current positions. Same as the last episode, everything's in the red except for Amazon. Between yesterday and today, I decided not to add to any of my open positions. For me, I'm still in that wait and see period as far as how far the market's going to go down. Even if it stays flat for a couple days or even goes up, that doesn't mean ultimately that it's not going to go down farther than what it is right now. By selling out of the PSQ, I'm back down to 44.18% invested, which means I have 55.82% sitting in cash. So I'm definitely playing the patience game right now and just waiting and seeing what the market does. The only positions that I'm thinking about adding into right now is C3AI, which is my smallest position at 1.89%. Right now it has a loss of 17.76, and I bought it after it had already gone down quite a bit. So that one I would feel comfortable adding to. The next one that I'm keeping my eye on closely is Square. Right now it's down 10.87%. I wouldn't add too much to it, but if it dropped a couple more percentage points, I don't see why I wouldn't add at least a little bit to it. Other than that, I'm pretty much just going to keep everything exactly the same. This is what the VIX chart is currently looking like. So we had been trading in this range all year long. I had talked about that when it got through this trend line, if it dropped back down and busted back down through that trend line, that would be ideal for a bullish scenario. But after it came back down a little bit, it ended up busting through this upper trend line, which is definitely more of a bearish signal. You pretty much always want to see the VIX low in order for stocks to go up. Occasionally it does spike and then come back down. But if this upper trend line becomes the new floor instead of this trend line, the market might not exactly tank, but I do think it would trade more sideways. So that's another reason why I'm not really rushing in to add to my open positions. Because until the VIX comes down, I just see everything either trading sideways or going down. So this is what the SPY chart looks like. Right now the price is below the 5-day moving average and the 15-day moving average, which definitely is bearish. Depending on how long it took over the next couple days, it would only be about just above 0.75 of a percentage point to get to this red trend line, which is ideally where I'd like to add to all my positions. It is possible that it corrects itself before getting to that level, but at this point I'd be pretty surprised if we didn't at least touch this for a day or two. Below this resistance level, it would be a pretty dramatic drop. We're looking at above a 6% decline. I'd be pretty surprised if something like that actually happened. So hopefully we just bounce off of this one and then we can start seeing green again. Since Monday, my portfolio went down 0.79%. The S&P 500 saw a drop of 1.43%. And the Ark Innovation ETF went down 6.15%, which brings us year to date. My portfolio has a gain of 14.93. The S&P 500 is at a gain of 6.51. And the Ark Innovation ETF on the year has a loss of 13.56%. That's all I got for today. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and I'll catch you on Sunday.